Thanks everyone. Today I'm presenting to you my business, H&C Financial Partners. Background about myself, banking and finance experience and financial planning for over 13 years. I started my financial services career with the Commonwealth Bank. Obviously I'm fully qualified to provide advice to anyone and everyone, degree qualifications there and all the relevant experience and qualifications that you need. A little bit of the personal side to myself. Here's my family. Little boy Jack, he's a year and a half. Little girl Mariana on the swings. She's almost 3, actually this Saturday. And my wife Adriana. All 3 keep me on my toes. Okay, so about the business, H&C Financial Partners. We're a financial advice practice located in Kew East. There's 2 directors / advisors, myself and my business partner, John Chorlos. We've got 4 staff in the practice. We've got 25 years plus experience in banking and finance, financial services. We've won some awards along the way, which is always great for some recognition in your industry. What we specialise in, as a lot of you may already realise, superannuation, self-managed super funds. Any super fund, whether it's industry fund or retail, we can provide advice. Personal insurance, we specialise in investment planning, retirement planning, even debt management. Okay, everyone has debt, and it's always good to get some advice on how best to pay it down. A little bit of insight in the business. We manage approximately $42 million of funds under management. So what that means in simpler terms is money invested by us for our clients. Now that doesn't include our client property portfolios or anything like that. We have approximately 160 actively managed ongoing clients. So what that means is every year or every second year, we provide ongoing advice services to these clients. Okay, so the main topic of my presentation, which I'm hoping you'll all take something from today, is making your money work harder for you. So to put it simply, many people invest their money or their savings in the following. Like the standard thing is put it in your bank account, in your high interest savings account, or an online account like ING or what have you, or you come into receipt of some money and you want to put it in a term deposit. The bank's giving you a special rate of 4 months, 1.8%. So a lot of people do that because that's what you're familiar with, you're comfortable with your bank. But unfortunately, the current environment means that you'll be lucky to get maybe 2% interest rate. Yeah, maybe 1.8, maybe 2.1 if you're lucky in the current environment. So today I just want to go over, just generally speaking, other options or ways to make your money work harder for you. So let's get into it. So another option for you of where to put your money could be in something like a managed fund investment account. So this is just one account that allows you to invest your money across different assets. Like you can choose how conservative you want to be and how much like your balance will go up and down over time. You can start with a small balance, like say $2,000, and you can make regular deposits into this account. It's just one account. You can even make withdrawals anytime. It's not like super. The only thing that you need to be mindful of is something like this. The balance will fluctuate, as I mentioned, but it's medium to long-term investment, say minimum 2 years. Okay, you'd be looking at a sort of time frame for that. You wouldn't come to me and say, Nick, I want to have potential for greater returns, but I only want to invest it for 6 months. That means you're better off staying with your term deposit or bank. Okay, just as a consideration. Okay, another way to park your money or invest your money is put it to your super. Why? Because it's tax effective. You can't get taxed more than 15% inside your super fund. So if you're on a marginal tax rate of say 32, approximately 38 or 48%, you actually get more bang for your buck putting it to your super fund. The flip side, so this is what I want to illustrate, sort of pros and cons. The flip side is, for one, it's long term, but you can't access your money till, for example, retirement. So you really need to keep that in mind. Next, having your money working harder for you isn't just about investing, guys. It's about using your money effectively. So one way to use your money effectively without necessarily investing it is park your money in your offset account or redraw account of offsetting your mortgage, your home loan. Like, rates are currently really low with your mortgage, which is fantastic, but you can at least still reduce your interest payable that you owe on your mortgage. Like, you'll be able to knock off time on your mortgage. If you park that money that you're thinking to put in your savings account, consider putting it in your mortgage offset account. Like a bank savings account, for example, is approximately 2%. You're still better off parking money in an offset if your mortgage rate is, say, 3.3%. The rate's higher, so you're going to get more value by parking it there. These are obviously just considerations for you, and it's generally speaking. Another option, or another way to make your money work harder for you, is pay down your personal debt or some of it. This is an option for you. Like your credit cards, guys, they're 14% minimum interest rate. Your personal loan, unsecured, 12% upwards. So another way to make your money work harder for you is pay down some of that debt because the rates are so high. Like, think of it that way. Just sort of base it. It's not always just about the interest rate, but for getting value, you should consider what rate you're paying, whether it's on a savings account or on a debt. And obviously, you all know, investing in property and shares is obviously another way to make your money work harder for you. Property, long-term, appreciating, goes up in value. It does still go up and down. And with shares, very similar. They're both high risk, high return. I guess the only difference is, at least with shares, you can sort of start with a minimum deposit and you can start investing. But that was just in a nutshell, just a little bit of food for thought for you guys. If you would like further information or sit down and for me to sort of tailor it to your exact needs, don't hesitate to approach me. Okay, so ideal referrals. For us, bread and butter, people with one or more super fund, they're time poor. The balance, 50K plus, it's not a must, but just round about. Couples, goals to travel, planning for a family, strategically wanting to pay down their debts. This is where we can assist. Cream referrals, people aged between over 45 plus, they start taking maybe their super more seriously. Again, the balance doesn't have to be 200K plus, but it's just a roundabout figure. Another cream referral for us, which we've brought on many the clients in this space, is people wanting a second opinion, and I actually mentioned it in my 45 second. Often they're unsure about what their advisors have set up or fees they're paying, whether it's in the product or from the advisor, how their money's invested. We've brought on many clients that have wanted that second opinion, and I guess it's credit to us. Dream referrals, strong referral partners, any one of the following professionals. As you can see here, we already have built some great relationships with a number of you in this chapter. Client testimonials. I'm not sure how much time I've got left, but you can jump on a public website, advisor ratings. It's all ratings around financial advisors. You'll be able to see another 20 or so there. H&C Financial Partners, like us on Facebook or Insta, and that's been my presentation this week. Do I say my quote of the day now or later?
Sure. Sure.
Yeah, on your last day on earth, the person you became will meet the person you could have become. Have a think about that.
Excellent.